So let me ask you this, Annie. I do want to talk more about syndication in just a couple of minutes, but there's so many options out there. And I guess when you look at it, like, how do you decide what's the right type of real estate investing for you? And even if real estate investing is right for you, because maybe it's not right for everyone.
Yeah, that's an excellent question. And so I would say first is to decide if real estate investing is right for you. So figure out, what are your investing goals? What are you trying to do with your money? How much money do you have to invest? And what other things have you already invested in? Maybe you're already in the stock market and you're looking to diversify outside of that into real estate. Or maybe you have no investing experience and you want to invest in real estate because it's a physical, tangible asset that you can touch and feel and see. So kind of getting a gut check on, why is it that you're invested or you're interested in real estate in the first place, I think is a wise move. And then from there, once you've decided that real estate is a good fit for you, then I would say the next question to ask yourself is how much involvement and control that you actually want to have in your investment. Do you want to roll up your sleeves and learn it all from the ground up, which is actually how we started with our first duplex. We bought it out of foreclosure, and the basement used to be a brothel. So we literally rolled up our sleeves and we had a ton of cleaning to do. We ripped out the kitchen. We did a ton of things down there in that basement unit. And we really cut our teeth on renovating that property. And so if that's you and you have time and energy and interest to do that, then active real estate investing might be for you. You want that control. You want more of a say in the direction and vision of that investment. But if you're on the flip side, you're like, well, I want to diversify. I have this pile of money, but I really don't want to have anything to do with managing the asset. I don't want to do any work. I just want to make sure my money is working for me in real estate. Then maybe passive investing is a better way to go. Syndications are certainly a way to do that, but there's other ways to invest passively in real estate as well.
So in terms of syndication, what does that mean? And how do we get into a strategy like that? Or how do we decide if it's right for us?
At the very core, a syndication is just a fancy term for a group investment. And so real estate syndication, instead of you taking, let's say, $50,000 of your own money and putting it into a single rental property, you might say, well, I actually want to put this into, a commercial property, like an apartment community. So then you put in 50,000, I put in 50,000, somebody else puts in 100,000, somebody else puts in 25K, and so on and so forth. And now we've got a pooling of resources, and all of a sudden we don't have just 50,000, we have millions of dollars. So it's too much to buy a single family home, which is why we venture into commercial real estate. And so we buy something like an apartment community. And so then once we buy that, then you and I, as a passive investor in this example, then there's no work for us to do on a day-to-day basis because the sponsor or the operator, they're doing the heavy lifting of the day-to-day management. They're dealing with evictions and tenant screenings and turnovers and renovations and all the stuff that needs to be done to ensure the success of that asset and the performance. And so they're doing all the heavy lifting. We, as passive investors, get updates on the regular. So every month, every quarter, we get detailed reports as well as cash flow distributions along the way. And then at the end, when the asset sells, usually in about 3 to 5 years, then we'd get our original investment back plus a portion of the proceeds from the sale. So it's a great way for us to participate in both the cash flow and the upside potential without really having to do much work. So it's an easy way to diversify into multiple markets, multiple types of assets and business plans.